U.S. inflation hit 8.6% in May, up from 8.3% in April and above analysts' expectations. While almost all major components increased over the month, the largest contributors were the indexes for shelter, airline fares, used cars and trucks, and new vehicles, the announcement from the U.S. Bureau of. Contrary to what was expected, today's inflation number means that a peak in inflation in the U.S. was not reached in March, when the headline Consumer Price Index, CPI, hit 8.5%. Market participants widely expected the year-over-year inflation number for May to come in unchanged from the month before, according to a Dow Jones survey. Meanwhile, the so-called core CPI, which excludes prices on food and energy, came in at 6% year-over-year, down from 6.2% a month earlier. The consensus among analysts was a core CPI reading of 5.9%. Citing an unnamed official in the Biden administration, the Financial Times wrote before the release that supply chain disruptions from COVID-19 related lockdowns in China, as well as the war in Ukraine, are likely to have maintained upward pressure on inflation in May. Also commenting ahead of TH. And naturally what's prevented the peak from being behind us is what's coming out of the energy sector, House, who expected a headline CPI figure of 8.4%, said. From the crypto-native world, Marcus Sotiru, an analyst at digital asset broker Global Block, said in an emailed comment that today's CPI number will heavily impact interest rate decisions from the U.S. Federal Reserve, Fed, and that volatility should be expected. It is a highly anticipated eve. The Fed's vice chair, Lael Brainerd, on June 2 said that the central bank could continue with half-point rate increases through September, and that it would only consider the more typical quarter-point increments after seeing a deceleration in monthly inflation numbers. Meanwhile, China also released its inflation figures for May on Friday, with the year-over-year CPI figure coming in at 2.1%, a far cry from the high inflation levels that are plaguing Western nations. The Chinese inflation print was slightly below analysts' expectation of 2%, and leaves room for the Chinese government to increase stimulus further. China-focused economist David Chu was quoted by Bloomberg as saying,